Welcome to Illuminati Silver. We tell her the truth about silver. Today is Sunday, the 12th of March, 2023. And last week we saw gold prices rise, but silver prices fall. Is this the demise of silver over the coming weeks as interest rates rise? Can we see $18 silver ahead? Well, let's find out. Okay, before we look at the figures, just a quick reminder that links to our gold and silver price forecast published at the start of the year is placed in the description box below. Now we find that gold rose $12 last week, rising from $1,855 to $1,867, having hit a high of $1,870 and a low of $1,809, a rise of 0.65%. But all that came on Friday. In sterling terms, it finished the week at £1,552, that's up £11, and in euros it closed at €1,755, that's up €9. Now silver actually fell 71 cents, falling from $21.26 to $20.55. It did go as high as $21.65, though that was a very temporary spike, quite an unusual one, to be frank, and a low of 1992. That's a fall of 3.3%. Had it not been for Friday, that would have been considerably lower. In sterling terms, silver closed at £17.09, down 58 pence on the week, and in euros it closed at €19.34, that's down 0.68 euros. The gold to silver ratio rose quite considerably from 87.3 to 1 to 90.1 to 1. Now the difference between gold's high and low was $61, and the difference between silver's high and low was $1.73. Now we predicted last week that we foresaw gold trading between 1800 and 1900, which it did, and we envisaged silver trading between 20, 25 and 22 for the main part, with 1950 to 22.25 as outliers, and again this is what we saw occur. Now before we delve deeper into what happened, let's take a look at other financials. Bitcoin currently stands at $20,336, that's down just over $2,000 on the week. Equities also took a hit. The Dow Jones closed on Friday at 31,909. That's down 1,481 points. That's on the week. The S&P 500 closed at 3,861. That's down 184 points on the week. And the Nasdaq Composite closed at 11,138. That's down 551 points on the week. Oils were also lower. Brent crude closed at $82.78. That's down $3.05. And WTI crude closed at $76.68. That's down exactly $3. And the dollar index stands at 104.57. That's up just 0.05 points on the week. So the economic data for last week became exciting, really, when Fed Chair Jerome Powell spoke to both houses of Congress, both on Tuesday and Wednesday, causing, really, gold and silver prices to fall, as his hawkish stance, particularly in relation to interest rates being raised higher and for longer than anticipated. This was further reinforced with a strong ADP employment report and what initially appeared to be a positive non-farm payroll report on Friday, showing another increase above expectations of some 311,000 new jobs against 225,000 expected, and against an increase of over 500,000 the month before. However, what did surprise markets and resulted really in gold and silver rising was the fact that the unemployment rate, rather than falling by 0.1% for Feb compared with Jan, it actually rose by 0.1%, taking the unemployment rate to 3.6. This immediately buoyed precious metals, seeing gold wipe out its losses for the week and gain some increase, and silver to reduce its losses, though still not managing to get back into positive territory. Traders are now of the view that whilst they thought interest rates could go up by as much as 0.5% on the 22nd of March, when the next FOMC decision is due, they're now likely only to go up by 0.25%. However, before one becomes too relaxed into this view, let's wait and see what the CPI figures on Tuesday reveal, which are expected to remain steady, as with January at 0.5% and core CPI holding at 0.4%. Any variation will undoubtedly cause a market reaction. In addition, we have retail sales on Wednesday, as well as the producer price index and the consumer sentiment index on Friday, with the FOMC decision the following week. So Tuesday and Wednesday are crucial this week. So where does this leave us in the overall scheme of things? Well, to begin with, gold is operating within a pretty predictable range of $1,800 to $1,900, but may breach the top end if there is a follow-through of its Friday's rise on Monday and the CPI on Tuesday are below market expectations. However, if CPI is higher, then gold could reach the lower end of the spectrum and even move down to as low as 1775, but with 1750 holding strong for the time being. Silver could be a different case altogether. Having plunged below its 61.8% Fibonacci retracement level of $20, even though it did recover in the end, technical analysts are of the view that silver is now potentially in a medium-term decline, and some are stating $18.50 silver is indeed possible in the coming weeks, with a maximum cap of $21.92, which is where the 50-week EMA sits, and with some resistance at the 200-week EMA of $21.52 before it. So they're looking at the top end less than $22 and at the short-term bottom end of around $18.50. So a lot of potential excitement this coming week. So with this in mind, our forecast for gold is to trade between $1,825 and $1,925, with $1,775 being the maximum low and $1,950 being the maximum high. Silver we envisage trading between $19.50 and $21.75 for the main part, with $18.50 and $22 as outliers, depending on the announcements on Tuesday and Wednesday. And we've placed links below to our gold and silver price forecast for 2023, in which we actually said we expected weaker prices in the first half of the year, only then to strengthen towards the end of the year once the full extent of the interest rate rises have already taken place. Meanwhile, thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Have a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.